I'm Charlotte McLeod with the Investing News Network, and here today with me is Byron King with Paradigm Press, which is formerly Agora Financial. Byron is a longtime newsletter writer, and he works with Jim Rickards on various publications, including the Rickards Gold Speculator. Thank you so much for joining me today. Great to see you.
It's great to be with you. Thank you, Charlotte.
Really nice to see you here in person at BRIC. And, you know, our conversations in the past have been pretty wide-ranging. We've covered a lot of different topics over the years. So today I want to start just by asking an open-ended question. Where are you seeing opportunity in 2023?
In 2023, I think it's time for people to realize that, you know, if it's not a completely different world, it's a very changed world. Those disrespected natural resource plays that have been cyclical and in the shadows and whatever for so many years are finally back in the limelight. It is a world of stuff, a world of real stuff, energy, materials, basic things, because without that, the rest of the world isn't going to function very well.
Okay, so let's try to delve into some of those materials that may be seeing, you know, good times in 2023. Maybe we start on gold, just because it's kind of on a run since the beginning of November. So I think a lot of people at this show are happy, but maybe feeling a little worried about, is this going to last? What are your thoughts?
Well, you know, you should always be worried because the history is cyclical. It goes up, it goes down. I mean, gold is a reflection of the strength of the US dollar and every other currency in the world. I mean, currencies are just currencies. You know, they were all traded against each other. In most parts of the world, if you own Turkish lira, if you own euros, if you own Japanese yen, whatever, your gold has done very well for you. In the U.S., if you know, since we denominate gold in dollars, I mean, gold was, you know, sort of trading in a range for years, very frustrating for a lot of people. It's gone up a couple of $100 in, like you said, the last 2-3 months. That is a reflection of the weakening of the dollar. I mean, 2021, 2022 were 2 years of very strengthening dollar. And so the dollar went up and gold sort of, you know, muddled along. Well, the dollar is weakening for a whole lot of reasons. We could get into, you know, there's a de-dollarization trend in the world, you know, Russia, China, that whole angle. Just not too long ago, our friends, the Saudis, our friends of 50-some years said, well, maybe we won't, you know, be selling oil in dollars only. We might sell oil for some yuan. Well, that was a bit of an earthquake for the monetary world. When you look at who's accumulating gold, I mean, yes, they're the individual people who go down to the coin dealer and buy a coin, but the big gold, the tons of the stuff is going to central banks around the world, who they ought to know something. Central banks, they tend to be smart about things. Big institutions, family offices. I mean, downstairs at the conference, I was talking with one fellow who deals with a lot of family trusts and family offices, and he said they talk about the invisible gold. You know, just entire bulks of gold just disappear. They go into these, and nobody knows where, but they load them on a truck, and the truck drives away, and that gold is not to be seen again, maybe for generations. So gold is doing well. I think if you're out there, if you're out there watching, obviously you're watching. There's a lot of legs left in gold because I don't think that this dollar has stopped its slide, and I don't think central banks are going to stop buying. And you know, the time to get it is now.
Let's maybe talk a little bit more about the dollar, because that's been a big topic here, de-dollarization at BRIC. Lots of people giving their opinions on that. So can you share your thoughts on what you see coming there? I know you said the dollar will continue to decline in 2023, but beyond that, this trend of de-dollarization. Well,
one person I was talking with put it very well. He said that the dollar, the dollar has been abused. I mean, the dollar has been weaponized. Certainly in the last, say, year. You know, you can think what you want about Russia and Ukraine. When Russia moved its tanks into Ukraine after years of other sanctions, I mean, what did the U.S., what did the West do? They seized sovereign assets of the Russian government. You can think, well, they deserve it. Well, yes, but you've just proved to everybody else in the world that holding dollar-denominated assets is not a good idea, because if the United States government or if the Western governments, the Western hegemons, if they get mad at you, they're going to take your stuff. So right away, people who were on the fence are off the fence. You know, and okay, we better de-dollarize there. You know, I mentioned the oil situation. You know, the Saudis look at the West and say, you know, okay, your culture is anti-fossil fuels. You hate oil. You do nothing but disrespect oil and natural gas, fossil fuels. That is our bread and butter. If you don't like our product, fine. We won't sell it in dollars exclusively anymore. We'll sell it to our friends, the Chinese. I mean, there's so many angles on that. But this is not a flash in the pan sort of a thing. These are historic trends. These are era-changing, epochal changes in terms of the rest of the world versus, you know, what we consider, you know, the West. You know, of course, we're in the West, but it's been a Western world for a long time. That is not necessarily what the future holds.
Right, and so everybody here in the West, that's who we are at this event, certainly for the most part anyway. I think that people are wondering, all right, what do I do with this very large trend? I guess one thing that you can do is you can buy gold. What else can you do in this de-dollarization trend? Should you be looking at other currencies, for example?
Other currencies. Now that's an interesting question. Let's get back to gold real quickly because
yes, don't leave that behind.
No, we're not. We're not going to leave your question behind. But let's get back to gold. Gold gives you flexibility. Gold gives you leverage. You know, if you're out there watching and you don't know a lot about gold, it's time to learn. There is a Western sense that gold is just for, you know, little earrings or little jewelry or something like that. Other parts of the world, gold is their wealth. Gold is their family wealth. It's generational wealth. And you know, they wear it in big gaudy chains or whatever, but or they lock it up in vaults. But in the West, we don't really have that sense of the importance of gold. But gold is nobody else's counterpart. No central bank can devalue your gold. I mean, there's no counterparty risk if you hold the gold. I mean, if there's gold and then there's like gold equities, you know, they're gold, you know, gold ETFs or something like that. That's not gold, that's a stock. You know, you've just bought something on the stock exchange. And so if you have gold, you have flexibility, you have leverage for whatever happens next. If the dollar gets good again, okay, you still got the gold, you change your dollars, or change your gold for dollars. If the dollar goes down and some other currency does, the yuan, the Chinese yuan, well, at least you can get some yuan. If the dollar goes down and you know, not that people buy barrels of oil from the Saudis, but if you need oil, you know, the Saudis will take your gold. You know, I mean, and so gold gives you flexibility in whatever currency or whatever follows on out of this dollar episode that we're going through. If the dollar craters, at least you've got your gold. If the dollar recovers, well, you got your gold. If the dollar strengthens, well, maybe your gold in dollar terms will go down a little bit, but you've mitigated your risk all along the way. Gold is a risk mitigating asset right now, and I mean physical gold, although there are a lot of really great gold mining companies downstairs in this conference center who have gold in the ground too, and I'm talking literally tens and tens of millions of ounces are on display downstairs.
Maybe we could talk a little bit about some of those companies downstairs where you're seeing optimism this year.
Well, I see a lot of optimism in the exploration and the early stage development side, and I see a lot of optimism in the royalty side of things. People think, oh, well, if I'm going to buy shares in a mining company, I want a real mining company that mines real gold. And there's nothing wrong with that, okay? There's nothing wrong with that. But let's parse it a little bit, okay? You know, walk with me down this path. If you're a big mining company and you're mining, you know, hundreds of thousands of ounces, you know, millions of ounces per year in total, you might have a whole string of mines and everything. You're subject to a lot of issues. You know, they're going to tax you for it. The government's going to tax you. They're going to regulate you. You've got labor issues. All your costs are going up. Your cost of fuel, your cost of cement, steel, the food that you bring into the workers' canteen. Everything's going up. So if you're a big mining company, your job is, yeah, it's to mine gold, but it's really to mitigate risk and it's to keep your costs under control. There's, you know, you can have some upside with the big guys if the price of gold goes up, or when the price of gold goes up. But if you want the real leverage, you want the really well-run explorers and developers because, the next drill hole they pull out of the ground could be, 20 meters of, 1 ounce per ton rock, and, the next thing you know, that stock was going to the moon. On the other side, the royalties, I mentioned the royalty companies. Royalties have no operational risk. Royalty companies years ago invested in gold plays, and so their return is that the gold play now is giving them a share of the sales of gold, or some of them even take the gold as gold, and they do whatever they want with it. So the royalty companies are a really, really good way to play the rising price of gold, because either the royalty itself or the gold itself, that's going up in value in a rising market. So early stage, really good explorers and developers, and the royalty plays are where a lot of the upside leverage is right now, the big time leverage.
Okay, and just briefly, because you mentioned costs going up and up and up for these companies, except the royalty companies, which are sheltered from that. How much is that a problem right now? Because we have had, inflation going up, gold price not going up maybe as much as we would like.
Well, a company like Barrick, for example, they announced earnings not too long ago, fairly recently, and they focused on rising cost structure within the company, and that's everything. That's the rising cost of diesel fuel, the rising cost of electricity, to run their mines. The steel, the concrete, the labor. A lot of the companies that have unionized labor, and even the ones that don't, they're having to pay more and more to get, just to keep the workers, keep a good relationship with the workers, obviously, and in the union world, if you've got unionized workers, some of these union contracts are tied to the consumer price index, certainly in the United States. If the CPI goes up, guess what? The base salary on the contract goes up too. A lot of those contracts have those clauses in them.
Oh, I didn't even realize that. Yeah. That's very interesting. So a lot of great thoughts on gold, but I want to take you over to energy as well, which you mentioned at the beginning of the conversation. So energy really came into focus, I think, again at the start of the Russia-Ukraine war, where everybody was very concerned about what might happen over in Europe, especially heading into the winter. Yes. And it seems like they got some relief over there because it was warmer than expected. And now those concerns are fading away a little bit, which worries me because I can only imagine that energy crisis concerns are going to rear their head again at some point. So what are your thoughts? Well,
some energy crises are longer than 6 months. They're longer than a seasonal winter. Europe lucked out so far in terms of a warmer than expected, perhaps, winter. There's still a month or two left. You never know. Some big, polar blast could come down from the North Pole. And so Europe is muddling through, although a lot of the damage has already been done. Last fall, if you followed the news from Europe, you saw really big companies, shutting down, idling the furnaces, shutting down plants. Companies like BASF, big chemicals company there. They were shutting down chemical processing plants for lack of natural gas. Some of these plants had not been shut down in 40 years, 50 years. They didn't know how to shut them down because they just pump the gas through and they process it and out the other end. Every now and then they do something for maintenance, but some of these plants are so big they've never been shut down, and once you shut them down, you may never be able to restart them. But the metals industry, the metallurgical industry in Europe really took it on the nose, because what do you need to do to melt metal? You need some sort of energy source, either electricity or natural gas, what have you. You can go all up and down the food chain, the industrial food chain in Europe. So a lot of the damage is done. So these companies that cut back or closed, maybe they'll restart, maybe not. It's tough to restart. It takes more energy to restart than it does to just sort of keep it going once the wheels are turning.
Okay, really interesting, because you hear mostly about, oh no, like they won't have energy, they won't be able to power their homes. But it's a business issue too, clearly, as you've been saying, and it's coming down to the metal supply chains and other industrial.
Yeah, well, speaking on the personal level, in a place like Germany, you know, for as green as Germany is, they're burning lignite coal, which is the dirtiest coal you can burn in, you know, in their old coal-fired power plants. You know, I guess the ones that they managed to not tear down and blow up the smokestacks or something. They're burning lignite coal, and they're chopping down entire swaths of German forest. You know, you might not see it in big city like Berlin or Hamburg or something like that, but if you get into the smaller towns of Germany, I mean, entire areas that used to be forested were just chainsawed. They were just stripped, you know, logged and stripped down, and they chopped up the wood. And this comes to me from my daughter who lives in Germany. If she was driving through Germany, she said, "Everywhere you go, there's firewood stacked up outside. You know, and you know, firewood's the new toilet paper." And so it's and then the crime in Germany. There's a rising crime of firewood theft. So I mean, so this is not the sign of a culture, of a country that's comfortable about its energy future. And then when they say, "Well, you know, we've got our solar panels and we have our windmills," yeah, you know, good luck with that. You know, I mean, you're at a very, very high latitude. It's the winter. It's dark. You know, 17 hours a day. You know, come on, guys, get real. You know.
Okay, those are some interesting anecdotes. And you know, we've been hearing about this, you know, burning coal, burning wood, and I've heard, I guess, various ways you could approach this energy story, right? Some people seem to be like, yeah, now is the time to maybe invest in coal again or oil and gas because we're going to need these things. So how are you going for that?
Okay, well, 2022 and the end of 2022 saw a massive recovery in coal mining stocks. You know, I mean, the Peabody coals, the Arch coals of the world. You know, those stocks did really, really well. At this point, you know, a coal mining company. I mean, I'd look at the chart, and you know, maybe on some sort of a dip, you know, I'd stick my toe in or something. Natural gas stocks have done very well. The LNG people have done extremely well. You know, the Cheniere energy type of plays. Natural gas, LNG, liquefied natural gas, has become a global commodity. I mean, Europe's paying top dollar for it. In the U.S., a lot of U.S. gas is being liquefied and sent overseas, which means that back in the U.S., whereas in Europe, the price of natural gas has maybe gone up by 6 or 7 times. In the U.S., it's not unfair to say that a price of natural gas for the home heating, for example, has tripled. I mean, on a personal level, I can tell you that my gas bill tripled from this year to last, and I live 8,500 feet away from the Marcellus Shale in Pennsylvania, straight down. Except I don't own it, so you know. It's but I literally live on top of one of the world's great natural gas deposits, the Marcellus Shale of Pennsylvania, Ohio, and West Virginia, and my gas bill tripled. So and everybody else, and that's not just my story. Everybody else in the country, everybody else in the United States who uses natural gas will probably tell you something similar to that.
Right. So yeah, I guess, and at the same time as we have this return to some of the forms of energy that we maybe would like to leave behind, we can't do that, but we have, you know, also the up and coming ones. Like we've talked before about copper. Sure. We've talked about the green energy transition. So how is that all fitting into here? If you're an investor,
okay.
How to approach?
Okay. Now all you people, this is why you sat through the first 15 minutes of this. Now we're going to get into it. A lot of people looked at lithium, and the lithium system has done really, really well. And guess what? We're still in the relatively early innings of lithium, because in terms of lithium demand for the batteries for the EVs, electric vehicle for automakers, nobody knows where the lithium's going to come from. There's just not enough. There's a supply-demand imbalance just built into the system for the next 6 or 7 years. So a lot of good lithium plays are out there that still have some upside. You need to be a stock picker about it, but I mean, lithium is generally good. Now, the other thing, when you look at an EV or you look at a battery that runs things, what is most of that battery? It's graphite. Graphite, well, yes, by weight, by volume, it's graphite. And you say, well, whoa, what's graphite? Is that like coal? No, it's not coal. Graphite is a different form of carbon, but there aren't a lot of graphite plays, in the West. Most of the world's graphite comes from China. If it's mined somewhere, not China, it goes to China for the processing. I mean, South Korea processes as well. In the U.S., well, when I say the U.S., in North America, U.S., Canada, I don't mean to be so U.S. oriented, but the U.S., Canada, I mean, there's some really Northern Graphite, for example, is a very nice company. They actually produce graphite. They have a mine, they have mills, and they're getting into not just the natural graphite out of the ground, but synthetic graphite, which is made from petroleum coke that comes out of oil refineries. It's that kind of crud that's left on the cracking towers after they do the refining process. There's this junky stuff on the side, but it's not junk. It's actually quite valuable. You take petroleum coke and you make synthetic graphite out of it. And most battery makers have this mix, this magic mix. Everybody's different, but how much natural, how much synthetic, what do they use it for? But Northern Graphite's pretty well ensconced as a North American play.
Okay, really interesting, because graphite is that kind of forgotten battery metal that we don't hear too much about. So happy to hear you talk about it.
The forgotten substance, exactly. Yeah.
Okay, I think, we've gone down a lot of different paths here. Are there any other things that you have on your mind, probably many things that you have on your mind in 2023, but thoughts that you would leave the audience with?
Well, over the years, many times, you've heard people say, this year is the year for this or the year for that, or, and we're early in the year, and, who knows, by the end of the year, we could all be turned into complete fools. I'm strong on gold, for sure. We talked about that earlier. Don't discount silver. I mean, people love silver. Everybody loves silver. And uranium is another play that is really about to break out. It had a really good year in 2022, I assure you. Look at the charts on companies like Uranium Energy Corporation or Cameco, whatever. Strong efforts, and it's going to get better. Just within the last few weeks, the Department of Energy, U.S. Department of Energy, licensed the design of what's called a small modular reactor, a small modular nuclear reactor. Not these big, huge things that take up entire, square mile. I mean, we're talking something that you build in a factory. You can put it on the back of a trailer, haul it to where you need it, set it up, and it runs, and it generates, megawatt scale power. In terms of the thermal energy, it boils the water that you need. But these small modular reactors are a thing. And I do think that the world in general, the culture is shifting back towards accepting nuclear power. In fact, Oliver Stone, movie maker Oliver Stone, makes movies about the JFK assassination and Richard Nixon and the crime on Wall Street. Oliver Stone just came out with a new movie where he's talking about how the world needs to go nuclear in terms of generating baseload electricity. And he gave a scathing interview at Davos, of all places, Davos, Switzerland, right in the belly of the beast. He stood up on stage and talked about how the environmental movement has been against nuclear power for 40 years, and they've really set mankind behind, because we should have thousands of smaller nuclear reactors out there generating baseload power across the world. And so the uranium space is wide open for upside investing. A lot of good companies there.
Yeah, a lot of good ones, and not too many choices, as I understand.
It's limited. Yeah, I mean, you can always find a gold deposit someplace, some mountainside, whatever, some brown stain on the hillside. But in terms of finding a mineable, recoverable quantity or amount of uranium ore in the ground, I mean, there are not that many places. And then when you do find a place, you have to have a place where it's politically possible to work. So a company like Uranium Energy Corporation, UEC, they're in Texas, they're in Wyoming. They've got some Canadian operations, things like that. Fission Energy Fission Energy is a play on both uranium, and they're processing rare earth metals. They're processing rare earth ores in the same plant, because a lot of the metallurgy is quite similar. So Cameco is the big one, the big giant, big 800-pound gorilla Cameco. But those are a couple great names.
Okay, well, thank you for going through really all of those topics with us. I think we covered a lot of ground. Always great to see you.
It's a pleasure, thank you. And to everybody who's watching, really appreciate that you watch this, and love working with Charlotte. Thank you.
Oh, great. Well, once again, I'm Charlotte McLeod with the Investing News Network, and this is Byron King with Paradigm Press.